Hey everyone, what's up? This is Mozart speaking. I'll do a quick breakdown before the start of the new week. It's a pretty important breakdown with some warnings. So, the current situation hasn't really changed at all compared to the last breakdown. Into everything that I wrote in the Telegram channel, respectively. That is, on Bitcoin and on Ether. Technically, the picture looks more or less the same. Let me show this on air, because there is a slightly more pronounced divergence here than on Bitcoin, a bullish divergence. By the way, speaking of which, that is, as if there was a divergence in long. I'll remove these lines. This is our previous entry. Into long, we closed it with you, in profit. All of this was shared on my Telegram channel. I don't post these trades on YouTube. I share them in Telegram, so if you don't want to miss out, make sure to subscribe to my Telegram channel. The link is in the description below this video. So, check it out. Here's what we're seeing on Ethereum. So 1, 2, 3. This is the corrective ABC pattern. Plus, we're looking at the closing candles. If we closed on December 22nd at around 3,280, then on January 9th, it was 3,217. So, the price has drawn a new low, but indicators like the MACD didn't create one. The new low was higher than the previous. In terms of price, it's like this. So, it's like this here, and in terms of price, it's like that. This convergence is called convergence. You can call it bullish divergence or bullish convergence, whatever works for you. But, first of all, what's the important point here? A very important point is that this potential convergence here, it was already actual. We need the main line to cross this signal line. That is slow moving, crossed. I apologize, fast moving, cross slow. Then we can consider this formation closed. Until that happens, and for now, the MACD is generally trending downwards, these two lines. That's the first important point. The second important point. We've been under the 50 moving average for quite a while. For a really long time, and just like with Ethereum, there was a false breakout here, and Bitcoin has been in the same situation for quite a while. This is the correction with a three-wave pattern, and if we look at how it plays out, well, for example, in 2021, there was a perfect, very similar picture right here. Usually, it always comes with a new low in the wave, but here, that low hasn't been updated yet. Well, for example, the same 21st year for Primera was an ideal, very similar picture. Here it was. Here it is, as a rule. Always comes with an update of the bark of the wave. But here and so far, this bark has not been updated. This also kind of raises a red flag for me. It makes me a bit uneasy. And the support levels for Ethereum are as follows. Where I would definitely consider opening a long position, plus averaging down as well. In case certain events happen, I'll talk more about them now. This will be the range mark, roughly between $30.40 and $3,000. This is the first range. Here we have the monthly S3 PBOT, and there will be an update on the wave based on the low. This is the first mark, and the second mark is a bit lower. That is, it is approximately a range from $2,800 to $2,900 to $9,500. Just like that, right in this range. Here you can average, because here there will already be an edge. We're going lower. It's a bear market. So basically, we're looking to close out this entire wave on Trump's victory and take out this liquidity. There's a huge amount of liquidity built up here. These are the two entry points. I'll provide more details in the Telegram channel. Right now, I can't say for sure. So, this week, yeah, we had important unemployment data. On Friday, they updated the lows for the stock markets, but they didn't update the lows for crypto, even though there was a drop. For now, crypto is holding up. It's holding up, and that's overall a pretty good signal. Next week, the key indicators will be released. If unemployment was second, then inflation will be first for the Fed. In terms of importance for the Fed, the Consumer Price Index, which is the inflation index, will be first. The forecast for Wednesday is at 2.9%, which is 0.2% higher than it was last month in December, will be first. The forecast for Wednesday is at 2.9%, which is 0.2% higher than it was last month in December. Overall, the prognosis is normal. It's a good buffer, but if it turns out to be more than 2.9, like 3 or 3.1, well, again, I'll say it, the likelihood of that happening, in this case with Ethereum testing the annual moving average, that purple line around 3050 is currently happening, and the 200-day moving average around 2950. It's very high, it seems, and most likely we won't see any strong, sweeping movements. It's going to be really high, and most likely we won't see any strong, sweeping movements like that. There won't be any huge, strong movements until those figures come out. Well, probably the first important figure will come out on Tuesday. The Producer Price Index is the PPI. It's also important for the market. It will serve as a proxy for the CPI, which will be on Wednesday. This is already the Consumer Price Index. And here, maybe the day after tomorrow, we'll start to see some clearer volatility. But the main one will be here. So, on Wednesday, the main one will be here. Next up is the Manufacturing Activity Index. But still, that will be after the fact. I think the direction will be set for the whole market on Wednesday. Because then, in a week, there won't be any important data. And right up until Trump's inauguration, I think the market will choose one direction. By the end of Wednesday, on top of that, if we look at the entire growth technically, from the point of Trump's victory, if we throw the Fibonacci on like this, then so far we've hit it twice. Twice. We hit the 50% of the entire growth. We can do it on corrections, on strong ones, and this is already a strong correction. Hit the 61.8. And right now, that mark is actually passing at the first level, where I'm ready to buy back Ethereum around $3,000. That's the 61.8, going lower with a huge margin. Well, there are going to be big problems here. Here, I'm already going to have my doubts about any quick continuation of the bull market. But that's 61.8. It could still poke through. We'll update Wave A and somehow wrap it up. So far, it looks way too simple and way too easy. Please, convergence, buy and like a reversal. Next, regarding the blockchain. Accordingly, nothing has changed in the key indicators. So our total profit is decreasing. In the last 30 days, it has already dropped 4 times. Basically, this. It also represents an optimal correction, just like it was in 2021. In 2017, it dropped almost to zero. The volatility was higher there. Next, the number of days, when more than 95% of purchased Bitcoins are in profit, has dropped from 27 to 7. We're also looking at the history. It drops to 0, for example. In March-April, it was at 0. It drops from 29 to 10 into the 3. It falls. Right now, we've probably dropped into the 3 from 27 to 7, divided by 3. Next, 2017. It's dropping. It could drop by 10 times. So basically, if we hang around here for a few more days, there will be a drop of 5, 6, 7, even 10 times. Next indicators. The indicator of realized profit to loss. The momentum of profit to loss. It dropped into the minus 45% zone. It's considered as a quick 7-day moving average divided by the annual moving average of 365 days, and it takes the average between profit to loss and loss to profit. That is, the fall is quite strong. A crash. We didn't see anything like this even in January. So even in January, it was only down 3%. In 2021, there was one such crash, down 49%, which is about the same as now. And in 2017, there were deeper crashes because Bitcoin fell overall to 40%. There was higher volatility there. There were even moments of minus 85%, minus 85, minus 94, and minus 92. Next, the funding still reflects the state of a strong correction in the bull market. I covered this in the last video, so I won't dwell on it. 1, 2, 3 drops to 0. The main thing is not to go below 0 and not to settle in the negative zone. So overall, this state of buying in the bull market will prevail for now. For now, we're generally in a bull market. Regarding the funding, it's average at 0.01% in the system. Standard funding, just flat. The absolutely minimum funding for longs. Next, the percentage of profitable offers dropped to 82% on January 9th. These are also some critical marks for the regular market. Well, I've already shown that 80%. I won't spend too much time on this in the previous videos either. We can drop another 80%, but we can't go lower than that. Below that, there will be serious danger. So, for example, just like it was after the Chinese ban, right here, we dropped below 80%, and then we fell down and stayed down for a long time during a very strong correction. The same thing happened in March-April after the Iranian attack. We fell down. Right here in April, we dropped below 80%, and that was it. We went down for a long time. The same goes for the transition to a bear market, for example. In 2018, we dropped below 80. Right here, we confidently fell, and then we went into a bear market for a long time. Right here, and we're heading into a bear market. Basically, critical marks. We can't fall much further. This is the line I mentioned to you in the last video. This blue line represents the average purchase price of all Bitcoin holders who have held for 1 to 3 months. So, in regular markets, that's the edge that the price touched. Right now, it's hovering around $91,600. About 91,600, 91,700. Right around here. 2021 year. We perfectly touched it, even just barely missed it. I apologize. 24th year, January, after the Bitcoin ETF was approved. That's it, and we went into a new impulse. In 2021, there was only one touch during the whole bull run, and then came the Chinese ban. Next, by the way, this is the ABC correction structure that I just showed you during the stream too. We touched this blue line, and then we move further up. In 2017, even in 2017, we touched this line right here, and that's it, twice very strong. The purple lines, we didn't touch it even once. The purple lines represent the holders, Bitcoin holders, in the range of 3 to 6 months. So their average purchase price is much lower. And if we take all the short-term holders, looking at the cost basis bands, their average holding period is from 1 hour to 6 months. These are all short-term holders. The average purchase price is around $88,000 to $89,000. And this is the price I'm looking at right now. So, if we see inflation data here on Tuesday or Wednesday that's higher than expected, then I think we'll get there. That is, it will be broadcast accordingly. Somewhere around $3,000 to $3,050 is the first entry point. If there's a strong overshoot, like really strong, it could drop down to around 2,800. I'll say it right away. For Bitcoin, this is about going for the average buying price of short-term traders. So, this is exactly it, at least touching the monthly chart once. S3, pivot, from the bottom. Here's my add-on point, from the upper entry point, although, in principle, you can close it at a minimal loss. Right now, it's down about 1.8%. Let's see. I'll think about it. And right here is where the $88,000 mark is. There it is, that mark. We've been hanging out under the 50 moving average for quite a while. Too long. So, those are my thoughts right now. If we don't break this bottom, meaning if January 9th was the last point of decline, and the inflation data comes out either below expectations, that's good for the markets, or, at least in consensus, Bitcoin doesn't make a new low. On January 9th, it comes back here above the 98 mark. It's getting established here. So, that's again a hold above the 50 moving average. We're reestablishing above the monthly our 3 pivot, and heading back to the maximum traded density around the $98,000 mark. That's it. You can go long from the current levels without even thinking too much. So far, that's the situation I mentioned, at least for me, in my trading system, considering the external sentiment and all the outside factors. What can't we overlook? A strong dollar, that's the dollar index, which is at 2-year highs. We can't ignore the market's concerns about the UK economy, and that includes the yield on British 10-year bonds, which broke all the highs of 2022, so you can't ignore that. No matter how things fall apart, the market is going to react to it on a global scale. You can't overlook that. Yeah, here we go again. With the euro falling against the dollar, that's aiming for parity. I think this year we'll see parity and we'll close all these gaps. We're already getting in there, right at this level. We're going to get back to the ones on Trump. All of this needs to be taken into account. Plus, there are the fires in Los Angeles. It's still unclear whether they'll side with the economy. There are already potential losses of more than $60 billion. How are they going to calculate all this? For now, they don't seem to be affecting the market at all, but you never know. It seems like the wind is picking up again, and the fire from Palisades is going to spread somewhere else. And what if it all goes beyond that? Some red lines on losses. There are a lot of nuances to consider that could impact the price. But the key days are definitely Tuesday and Wednesday. The key, 2 days. That's it. Here's the overview. That's my warning. Well, probably. From the longs, flowing. Although, again, I'm looking at the daily time frame in my system. Daily and weekly. I, I'm not looking at the minute charts right now, not even the hourly ones. And there, maybe you can lag from the current levels. Probably even possible. So, yeah, I trade intraday. I do it just for myself, but I can't really consider it scalping for such a huge audience. There, you just won't be able to jump in with me. There are different trends and totally different rules of operation there. You don't even have to pay attention to the news there. Well, except for those very minutes that don't come out. But for the daily and weekly charts, you need to take that into account. Alright, thanks everyone for your attention. Have a great week. This was Mozart, and see you later.